Well, we're really excited to have you guys together. Um, we consider this like really the core team, right? As far as the portfolio division. I'm sure Jason's given you a lot of upfront information as far as a lot of the movement that's happening with these big hedge funds. And it really is insane. Like it dawned on me the past couple of weeks, like we're standing in the middle of the largest separation of wealth in history, right? Like it really is in this post-COVID world, right? With all the money that's just been printed into circulation, right? I think of it like we just got carpet bombed with US dollars, right? Just money is very abundant. And what these big institutions are doing, right, is they're creating like a suction cup pipeline where they're positioning themselves, leveraging the record low interest rates, right, and building massive rental portfolios off of that, because we all know that we're going into some type of an inflationary scenario, right? No one really knows completely what to expect. But it doesn't matter what level of financial literacy or where you're at in your current journey. I think all of us can agree that we definitely know something different, right? You can just sense the shifting of culture, even the shifting of the way that we do business, the way that we interact, hence the online, the Zoom meetings. A lot of companies, from small companies all the way up, are realizing the need to really pivot and be able to leverage that. So that takes us into like the bigger picture of what we see happening with these institutions. And me and Jay were talking about it last week, right? And it really is it's like the real estate gold rush. It really is. Like then I feel like the window that we have is very small. We might have 2 to 3 years, maybe 4 if we're lucky, 4 to 5. But looking at the rate of houses that these hedge funds are buying, right? Now that Wall Street money is in the play, right? Because it's pension funds, Wall Street money is now considering single family real estate as an investment vehicle, right? Where in the past, the institutional money, there might have been private investors and private funds, but the big institutional money was not really considered, or single family was not considered like an investment vehicle for the pension funds, so now Wall Street's in the mix, driving up prices, right? And we all know that we're in the most competitive real estate market we've probably ever seen. So important to lean in, right? And so we're really focusing on building the team, building our core group, really of culture carriers, where we're all moving in unison. We're all on the same page, utilizing our unique gifts, right? And abilities, network resources based on our current location, right? Relationships and all that stuff to figure out how we can strategically get together, right? Disperse the opportunities we have and really dial in with the buy boxes, right? Like understanding the markets, the locations, the unique criteria, that the funds have an appetite for. And we can really just create a pipeline, right? Create a sales-driven approach to dialing in with some of these portfolios. Jay, you want to jump in and talk a little bit about some of the things that we got in motion at the moment?
I think, Candice and some of the, member of the team, is already aware pretty much. Right now, we have 4 portfolios working on B. We're already closed one, right? Which is the Fort Lauderdale.
Yes, sir. I was muted.
Right. So what I was telling, most of the teams that, the hedge pretty much, they love portfolio deals. This is, not to pretty much get deterred from doing a few houses here or there, but if you guys can actually acquire, portfolios, that would be great. That would be great. And so with that being said, maybe we want to open the floor with a few questions that are concerns that some of the agents probably have for us. Maybe Monica, maybe Jennifer can start it off. That would be good. As far as the contract goes, what are you guys' main concern right now as far as the contracts?
Let's do this, Jay. If you guys are open to it, I'd love to just go over some of the buy box criteria so I can share my screen and really just give you guys a clear picture as far as, locations, appetite, and then we can open up from there and help bring clarity and expectations. Right. So this is like the big picture of the buy box, at least for the portfolio division, right? So I know we've started off with, the single family homes, and yes, it's cool. It's amazing. We can find opportunities and deals, right? Give the seller cash, and the funds are coming in and paying the difference between whatever the AB contract price is and what they're willing to pay in that unique market, based on their appetite. But what we've done is just break down the buy box criteria for several different funds. And we've actually overlapped a couple of the funds with the big ones, right? But this is the best way that we've been able to really disperse the logistics, right? And put it together in a format that's digestible. So each of the areas, for those of you that might be familiar, right? We have buy box folders for each, where we have it broken down even by target zip codes. But I would say that the zip codes are cool, right? Especially for quote unquote, like wholesalers or investors, people that pull data and use that for marketing purposes. But for agents, right, in this strategy, it really is more relationship based and having a pulse on what's going on in your unique neck of the woods, right? Your unique market. So that's kind of where it started off, right? And we've just, I've been in the investing space for past 6 years, and never have I seen, funds or any cash buyers paying the crazy amounts of money for houses that they are now, right? Like, my perspective, they're paying way more than they should to build a stable and a safe investment portfolio, but they're thinking big picture, right? They're thinking, hey, value of a dollar is going down, so hard assets and commodities like real estate is really the best play in it, when inflation is coming. So that's big picture, kind of where it started off with the single families. But as things are developing, right, these funds, just as hungry as they are for some one-off deals, they have a much larger appetite for portfolios, right? Either pre-existing portfolios or even new construction, right? You're seeing these build to rent subdivisions coming up, right? Just popping up left and right, especially in markets like Florida, right? So I'll dial in with that, but it's really it's interesting from the outside looking in to see, the perspective with what's happening here, right? But most of you might know that Florida is the #1 relocation destination for people in the United States, right? Going from like highly congested areas up north, or, the western part of the country, a lot of people moving down to Florida. Like by the boatload, right? Moving down in groves. Wow. And so a lot of this area, right, where, outside of the Palm Beach and stuff, a lot of this is like, heavy trees and rainforest, like, just heavy growth. But literally they're like toppling over trees and just popping up these new subdivisions, right? As fast as we can put them up, they're just going up, right? And instead of opening up, I'm sure some of them are retail, right? I'm sure they still open it up to some retail buyers, but just as quick as they're putting it up, they also have these institutions now who will buy the entire development, right, in order to rent it out to these transplants and really to sustain, and provide housing for the growth that's taking place, right? And so when I was saying like the real estate gold rush, like, holy cow, like we're seeing it right now. The portfolio that we have that just got moved in Palm Beach, right? So this was a brand new market for one of these funds. And we introduced them and gave them the first portfolio to really, start to plant their roots where they're starting to really blow up and expand. And their appetite is so large. They're like, hey guys, like, these are our core markets. But if you happen to have a portfolio that's just like slightly outside of it, especially in the core areas, right? Like Florida, Atlanta, North Carolina, right? Little bit of South Carolina. Some of the big players just touched down in Greenville, Spartanburg area. But it's just crazy the appetite that they have, right? So for us, right, being able to see that what's happening, right, and the window of opportunity that it's here, and just really lean in and figure out how to source opportunities and deals, based on the areas that they're looking for, Of course, like anything else, I believe that we accomplish the most by just having a laser focus, right? Like really dialing in and focusing on either the markets that we really have a pulse on, the areas that we have relationships already, right? And just going all in with it. So right here, we have a sheet of kind of like a bigger picture scope of the active portfolio markets. And we can also see the amount of volume, right? The amount of houses that are being purchased in each. Of course, Atlanta being the front runner, right? I say Atlanta's like one of the honeypots as far as, investment hubs for the Southeast. It's just such a large, booming city. For those of you that are active there, it's crazy, right? So this is looking over the past month, the number of active deals in escrow or closing. We currently have 199 in Atlanta. You see Dallas is big, Houston, Vegas, Memphis, Phoenix, but don't sleep on Florida, right? Tampa, Orlando, Jacksonville. So I say that, and then I also highlight, some of these markets like Central and South Florida, so of course, Orlando, Tampa, Miami, Palm Beach, right? But even something that's coming up, even new developments, close proximity to these areas, they're going to look at it, right? But it's just creating a smooth process and knowing exactly what we're looking for. I'd say the cleanest asset that we're, to really be clear, 3-bed, 2-bath and up would be preferred. 1,200 square feet and greater, built after 1980 is our perfect property or portfolio avatar, right? So one-off deals or portfolios, that's our strike zone. That's where they're coming in hot, right? But they will, some of the funds will buy as old as 1965. Now, if we present a portfolio to them that say, it's mixed, it's got majority, 1965 and newer, but there's a couple older ones in the mix, they'll entertain it, they'll look at it, right? But they're really, really trying to stay above 1965 year built as much as possible, right? Once we start getting properties older than that, we're dealing with the old aluminum wire electrical and the old cast iron plumbing, right? Which ends up being a pretty big pain point when they're bringing in their rehab teams and really looking to stabilize houses or portfolios if it has to be, right? So looking at the trends of last year, we pretty much broke their buy box, right? Like Q3 was buying frenzy, right? They bought so many houses, Q3, beginning of Q4, that when we got to like after summer, of course, the real estate market slows down a little bit as we approach the holidays. But these funds bought so many houses that they were like way backlogged. We're talking 6-8 months backlogged in getting these houses stabilized. So some of them started capping the rehab amounts, like 30 grand, 50 grand in some markets. So I mean, it hurt us a little bit, as far as like us sourcing opportunities and stuff. But we're coming out of that winter lull, right? Like November, December, January was really pretty slow on our side. February started to pick up. March, we're building momentum. And as we're picking up, approaching the summer months, like we're talking, it's time. The next 5 months of the year are the opportunity, right? Like this is the sweet spot where we really got to dial in and strike hard. Because again, once summer's up, if it's looks anything like the trends of last year, it's gonna taper off a good bit. They'll still be buying, but they're gonna get more picky with what they buy. And we all know there's not going to be as many people selling, right, in the winter season. You want to kind of, hang around with family and cuddle up and stay warm. So that's big picture as far as, kind of what we're dialing in with, being specific with the areas that we're looking for. Yes, it is, typically newer assets, 1965, 1980 and newer. They would prefer like neighborhood type settings, right? When we get too rural, another big thing is like well and septic. In most cases, is going to be like do not buy, right? So they want to be on city water as much as possible. Neighborhood type settings, cookie cutter neighborhoods, perfect, right? They'll look at things, but anything more than an acre of land is probably not going to be the best fit. Obviously, if there's one in the mix of a larger portfolio, they're willing to play ball to make a deal happen. but that's big picture. And I think that tackles just about every piece of the buy box that's really important for us to know. And then, we can of course dial in on process and what that actually looks like. In some cases, I say some cases very sparingly, I can kind of preliminarily send out a portfolio pre-contract, right? Just to kind of gauge the interest. And if they're like, hey, this looks good, we'd love to dive in, we can kind of reverse engineer that and take it, as far as like, especially if we have a starting point on their number, right? We know we got to be under a certain threshold to make it work. So we can dive in a little bit deeper with that process as we go, but love to open it up and just hear a little bit of insight about what you guys as agents and real estate professionals are seeing in the market, and dialing in to see how we can work together to be effective.
So Ben, I just have a couple of questions. I know you said that new developments are of interest. Where is the interest lying right now as far as the townhomes, duplex, triplex, quadplex? Is that as pertinent as your portfolios and single families?
Amazing question. I'm really glad you asked that up front, because it's really important. The multifamilies, even the duplexes, triplexes, and even townhomes, like it's considered a completely different asset class, like all together, right? The zoning is different. Once you go to multifamily, it's commercial zoning. And I hate this part, right? Because we're seeing a lot of portfolios get submitted into the fold, and they have like mixes, right? It's like half single family and then half multifamily, smaller duplexes, triplexes, quads. The funds have zero appetite for the multis, like none, right? And the townhomes is kind of the same thing. I have two markets that I have clarity on townhomes, and that is Dallas, Texas, and what is the other one? And Atlanta and Houston. Atlanta and Houston, I have clarity on townhomes, but the townhomes, as opposed to being a minimum year built of 1965, they require 1990 and newer. So if Atlanta or Houston are, markets that you guys are active in, I'd lean in with that and consider that a viable option. But if that's not your markets, I would say let's absolutely just exclude that asset class. Which again, it sucks because I've seen a lot of, more than half of the submissions that come through are mixed, right? They got the single families and a little mix of multi as well. So the conversation becomes like, hey, are we able to split this up? The funds, the institutions we're working with really need to stick with the single families. It's just that it's the asset class that we're going after. Would you guys be willing to split it up, right? And just opening up the conversation.
Okay. And then as far as, I know there are some neighboring cities that you can find properties in. Say, for instance, if I find neighboring cities in Fund 1 that are close to like Charlotte or Atlanta, are we sticking to the year built and square footage based on each fund with the neighboring cities?
Yes, I would say so. I would say just as a rule of thumb, obviously Fund 1 will buy a little bit smaller of an asset, and in some cases they'll even go like 1950. But to understand just like the trajectory, let's use Atlanta as an example. So if we're looking at Atlanta, right, from a bird's eye view, now Atlanta is massive, right? Huge. I've seen them go out as far as Noonan, but a lot of the deals in Noonan get turned down because it's a lot of it pretty rural, right? Like Noonan's a cool little spot and they got like nice houses, but they tend to come with a lot of land. If we're looking at the bird's eye view, I tend to try to stick to, let me do this. So when you look at the outer loop, right, the freeway band that wraps around most cities, I would go like, 30 minutes outside of that. if you will, 30 minutes, 30 miles, and just drawing a large circle around it. Like, they'll play ball in Conyers, Snellville, Lawrenceville, Sewanee, even Beaufort. We got some deals in Beaufort going. So really Dallas, Georgia is a big one. Really just drawing a big circle out of like Peachtree. So my initial circle actually was probably too small. McDonough, right? So that's probably a kind of a good taste of like the city of Atlanta, the way that it's considered with the funds, right? So we're talking greater Atlanta area, anywhere that you could, consider that someone could live in one of these suburbs, but also be in driving distance, even if it took them an hour, right? Especially with Atlanta traffic. Yeah, I'd say it's definitely worth, leaning in and looking at the houses. Main thing, again, is if the house is in a neighborhood type setting, beautiful, right? They're wanting to stick towards somewhat nicer assets. There is a minimum annual household income for the funds. So if the minimum household income for like a neighborhood comes below $35,000 per annum, right, and that's as a household, then the funds will pass by it, right? So just like rule of thumb, we try to stick with houses at least like 150 and up in most markets, right? If we're talking like Birmingham or Memphis or one of the smaller tertiary markets, it's a different story, right? Because $120,000 house in Memphis probably rent for $1,400. It's just kind of a different ecosystem.
Does that even exist anymore?
Right. Right. We're talking about that like locally. A median income house in Columbia was like 150 grand, and now it's like $300,000 just to get in a nice, nice decent area. It's crazy.
That brings up a question that I have about the same thing. I'm just noticing on some of these funds, there are specific zip codes, right, that it's targeting.
Yes.
And it's basically stating that they want to be in desirable neighborhoods in good school districts, but the zip codes that they've chosen are probably the worst areas that I could think of moving to.
Really?
So,
Okay.
so I'm just curious where the disconnect is. And, if they want to stick in those zip codes because those areas are growing, I get it. But I just would like some clarity around that because almost every zip code that I looked at, I think in the Fund One box, I'm like,
Yes.
they want to
Okay.
move here? Okay.
Glad we're on this. So I would not, as far as leaning in with the zip code specifics, I would not focus on that almost at all. So Fund Two is the only fund that if the zip code list is not on their buy box, they're like, we're not going to buy it. Hey, it's not on our zip code list. We're not going to buy it. Right. So this is like it's the roadmap. This is the blueprint for Fund Two. But Fund One, I excluded the buy box for Fund One. When we first built this, there's a couple people in the program, and they had reached back. When I took it off, they're like, hey, what happened to the zip code list for Fund One? And so I put it back on there. Long story short, the way that we aggregated this data, we don't have access to like the full scope as far as all the zip codes that they're buying, right? So if we're operating in Fund One zip codes, it's actually limiting our progress like tremendously, right? Because these zip codes were aggregated over a 1 month period from inside of the system based on the current properties and transactions that were either in escrow or set for inspections, right? So this was gathered like end of last summer, right? So we're talking semi-old data with just the framework for 1 month of the transactions that they had in process pulled from the system. So Fund One, I should not even have a buy box here, right? Long story short, I just had a few people reaching out. So going back to that, I wouldn't even waste time looking at the zip codes, to be honest, right? I just kind of dial in based on if the markets that we're active in, right? Let's really focus on going big there. And I guess depending if we're going for the single families or the portfolios, single families, like even internally, if you guys needed help with underwriting, like our team, Lisa and Sarah, submit so many of these deals every single day that they have a pretty good understanding and a good pulse on, you know, a ballpark range of where the funds should come in based on the properties. But I mean, I'm in the mindset just like the rest of the real estate market right now, where we just go all in, right? And we miss 100% of the shots that we don't take, right? And so we should, the numbers, like the data, even if something's like slightly, maybe not outside of the buy box, but kind of like there's question if it's even in the proximity of it, I say we go for it, right? Because we have our due diligence period and everything else for a reason. Obviously, we only want to spend time on the activities that are going to help to push the productivity and the needle in the way it needs to go. But I'd go all in, right? So, same thing. So let's look at like Florida, right? Kind of the same thing. But Florida, like we're talking, let me get my thing, you know, drawing like a big circle around the band of Tampa. And then if we carry the I-4 corridor all the way up, anywhere that there's like developments or suburbs, like Lakeland, Winter Haven, Davenport, Kissimmee, all the way up to Orlando, all buy box, right? All hitting that buy box.
And really north of there, there were actually a lot of zip codes that were up in Volusia County, which is just north of where you see the top of where Sanford is.
Yes.
Higher. Up into like Volusia, it was like Deltona and Orange City and all of that.
Yeah. So I'll say this. I should have the Daytona Beach, Ormond Beach. Last summer, we were seeing a good bit of traffic in those areas.
Mm-hmm.
But they kind of slowed down in the beach area here.
I was saying Deltona, not Daytona.
Yeah.
It's a different little city south of there.
Yeah.
A hot little area.
Yeah. To your point, I think you're probably right. Maybe even like this loop is kind of hugging around this high point, right? And just drawing anywhere where you see the developments, the roads and stuff. I mean, we can assume that there's economy and commerce and enough traffic where they're going to have an appetite to go, you know, any of those areas that make sense. Biggest piece is just having the infrastructure to manage a portfolio or properties that are close enough proximity to the city, right? Where you wouldn't want to buy something out here where there's no development and you're, you know, going to check on one or two properties, you know, but
there's almost nowhere in the greater Central Florida area without development though. You know, even when you're looking on that map, don't let that fool you. I mean, if you live in one little city right outside of Orlando, you don't even need to go to Orlando. You have everything you need. But Fund 2, that's the one we need to pay attention to specific zip codes.
So at the moment, Fund 2 is one of our least aggressive funds, to be honest, because they're still coming up for air. Everyone else seems to have kind of recovered from last summer, but Fund 2, they're still buying, but they're super picky, right? Mm-hmm. And if the rehab's more than like 50 grand, they're not touching it. So Fund 1, believe it or not, these ones aren't even our biggest players right now. Fund 1, Fund 2, Fund 3 is picking up some major traction. So I'd lean in with, you know, the Fund 3 buy box, and there's a couple that aren't even listed on here. And there's a couple portfolio funds that won't even consider or look at the single one-off deals. But if we can present a portfolio to them, they're going to make a move, right? And they're going to come in really strong. So this is, if I listed like all the funds for each area, it'd just be too chaotic and too much to keep up with, right? So my goal is to kind of keep it as simple to navigate as possible, right? Making sure that if there's any new areas or locations on a buy box, that we have it included, right? Like Fund 4 is really unique because they're going after the more of the tertiary markets, right? The medium-sized areas. And then tertiary funds, this is a mix of like five funds in one that just have a similar acquisitions criteria, similar appetite, right, as far as the type of assets they're looking for. I would say they're not quite as aggressive as the big guys, the big pension funds. These are more like privately held funds, who are active in these markets.
How does it work with you mentioned new construction?
Yeah.
How does it work with new construction? Is this like ready to move in homes that they're purchasing, and are they just buying one-offs, or are they wanting to buy portfolio of those, or what are they looking to do with that? I would need clarity.
I would say all of the above. I do think that our sweet spot's going to be the subdivisions that are like right there near completion, right? That coming up, or, they're close enough and it's really moving forward where they have the concept in place. And we can present the pro forma, like what the format on how the makeup of that portfolio is going to be with each, house, square footage, bed, bath count, where they can take that information and, look at data with similar type of assets, right? And be able to put together a pro forma to make sense as far as the number perspective and new builds. So the new land acquisition and new builds, there's not as many players when it comes to that. There's really only like two specific that would even consider, right? Like raw land where they can actually get in there and build their own subdivisions. Mm-hmm. I'm still trying to get a pulse on that, right? Like I'd say, let's not cross it off the buy box. Like if there's an opportunity worth looking at, I think it makes sense. But because we don't have as much of a proof of concept with it yet, right? We're still trying to kind of figure our way into that ecosystem for it to make sense to everybody.
Right. I think, let me try to chime in because I know Jennifer got a lot more questions. But if you don't mind, I'd like to get some understanding about a few things as well. Now, when we talk about the new construction aspect of it, I know that's not really high on your portfolio right now, as for what I'm understanding. But when it comes down to the actual building part of that, here in my market, I can only speak for my market and how everybody else is. But as soon as they're available, they're gone. There is no room for anything else. So my question to you is, how can you give me understanding on the process? Because at this point, we've, I think, submitted about 3 offers and we're not really here much. I don't see my market too much on there because I'm not in Greenville, I'm not in Columbia. Can I write offers? Absolutely, but that's not my market. So my market is more or less the Hilton Head, Bluffton, Beaufort. I can do Charleston. I'm even in Savannah, Pooler, the surrounding areas. I'm not seeing that really on there. So can you tell me how that would factor into your you guys' portfolio and your interest? And it's not going to be as high as Atlanta, I'm certain, but can you give me some idea about that, please?
Definitely. So South Carolina, we're semi behind the curve. I think it's a good thing because we're not seeing that. I mean, South Carolina is the number 2 relocation spot, right? So money's floating here, which isn't great. It's great, right? But at the same time, it's just going to blow up in a big city. So Charleston, out of your markets, Charleston is the only one that's on the mix, right? Now looking at last month, there was no acquisitions for single family homes. Charleston's a competitive market. So I'm located in Columbia, right? Columbia, South Carolina, just right above you guys. I've tried dabbling in Charleston several times in the past, and it's just always been really, really difficult to find inventory. And Charleston, especially, I would say really trying to go after the portfolio deals would be the play, because there's only one fund that would even consider playing ball with the single families. I think the proof of concept, the model with it could be a little bit harder to dial in at scale in full transparency. Hard to really gauge it, right? I'm sure it has a lot to do with the tax structure, right? So in Beaufort, Hilton Head, lots of money out there, right? So property taxes are significantly higher than we're seeing like in the upstate and some other areas that are exploding right now, right? So I mean, Low country, some of the most beautiful part of South Carolina, right? It really is. And there's a lot of money out there. But with it, right, with a lot of money, really high property taxes, which for buy and hold investors, right, and these institutions are buy and hold, they're calculating every piece to that puzzle, right? If there's an HOA, that HOA has to be factored into the cap rate, right? Annual property taxes, that's got to be baked into the cap rate as well, which, you know, if we're going from, let's say, $4,000 to $5,000 a month for property taxes, you know, upstate, where it might be 10 to 12,000 in the low country. I don't know exactly what it would be for a non-owner occupant, but that's like $500 a month, right? And additional that's taking off of the buying power for that market, right? So it really.
So that's not high on your scale that you're looking at right now. You're not looking at that. Now, as far as Savannah goes, because Savannah is that's a pretty hot market as well. Pooler, Port Wentworth, those areas. Where does that fit into your portfolio?
Good question. So I don't know why Savannah is not popping up on any buy boxes at all. Like if you look at any of the areas, and I don't know why Savannah is like a booming area too. I'm not familiar enough with the Savannah market in full transparency to give you like a clear answer and why that's not included. Yeah, but I haven't seen Savannah on any of at least the big institutions buy boxes.
So can you break down to me the whole process? Because at this point, this is, you know, pivoting from that section. When we're looking at the entire process here, that's the part that I think I'm still missing a few details on. Candace has been fantastic. Jason has been fantastic with kind of giving me a better idea of how this whole process works, who needs to see what, where it needs to go before it gets back to me. Yes. So can you also break it down for me so I have a clearer and better understanding about what it is that, you know, that you guys do and how the whole deal comes back to me full circle so that we can present the offer? Yeah,
so we're a private investment firm, right? So very similar to Jason. Jason and us are partners, right? So we are in direct contact with the institutions. I am not on payroll with any of the direct funds. I'm not directly affiliated with them. We just have established a really strong relationship over the past several years where we have direct access to their internal acquisitions. So with that being said, our position, like uniquely, right, similar to Jay, is we're partnering up on these deals where we're writing contracts either in Jason's company's name, our company's name, or we have a merged company or even a trust, right, that has the beneficiaries lined up underneath that. So it really is, it's like a wholesale deal, if you will, right? Because we have an AB contract, which is seller to us and our partners, whoever the contract holder is, right? And then we have the BC contract, which is us to the fund, right? So we're either double closing or we're assigning our position in these contracts to these big institutions. Like the one in Palm Bay or Palm Beach, they were asking 1.825 for the portfolio, and the fund picked it up for 1.95, right? So 125K profit just for being able to lock it up and pass it along. So I would say as far as like the process, it depends on the unique situation, depends if it's a one-off deal, if it's portfolio. With the portfolios, like I stated, we can softly submit it, right? Like I can kind of, if we're working towards one, the rapport's there, we've already had discussion on price, you know, we've kind of like verbally said, hey, if we're at this number, is it a number that can make sense, right? So we know for a fact, at least that range of where we can lock it up, right? I'm all about being aggressive and just locking it up, right? But if we don't quite have the confidence for whatever reason, and there's, you know, mixed assets inside of that portfolio, In some cases, I can bring it to the funds, right? Based on which institution it fits with, we can submit it to them and get like a soft offer. Like, hey guys, this is kind of where we're at. Just wanted to shoot it by your desk to see if you guys can play ball at this number, right? And with that, we can go back and we know kind of like the starting point with, hey, as long as we can get it, significantly below this, let's go ahead and lock it up so we can submit it into the system and get it in process. Once the contract's in process, we'll submit, right? So the portfolio gets submitted or the single deal gets submitted into the system. We submit it to the funds based on market. Once we have that first initial offer back, boom, we move towards inspections, right? So it's like, if it's a portfolio deal, we're going under contract before any inspections, right? But in some cases with the one-off deals, just for like paperwork's sake, we have the contract in place, right? The AB, but in many cases, we're not writing up the BC or, passing along and assigning it to the fund until post-inspection, right? We can, but just because it's just extra addendums and paperwork and everything else, they like to give us an offer, soft offer, set inspections. After the finalized inspection report comes back, then they know for sure, hey, perfect, we're good to go. Let's lock it in, no contingencies. We're good to go at this number, right? Contract, move it to closing. And so on the back end, our team, as far as our transaction coordinators, right, we have a team that's built out in place so that from the time that we receive the portfolio, right, we get the offers in place, we're already moving towards and pushing towards inspections, right? Inspections are done, perfect. We're making sure that we get the seller information sheet out, right? Any other important information is taken care of, and we're overseeing the transaction, right? Making sure that everything is smooth and on schedule. Does that help answer your question?
Monica?
Yes, it does answer my question.
Perfect.
Okay.
What do you guys think based on your pulse and your unique markets, right? When we're talking the big deals, and this is, talking like the mindset piece of it, and it's just really, it's like the light bulb moment goes off in your head, right? But you realize that it takes the same amount of time to build high level relationships, right? Whether it be brokers, developers, right? And just really leaning into even different circles to connect with people that might have a pulse on these big deals, right? Like, again, looking at the rate of these subdivisions that are just going up, right? In Florida, it's like growth is exploding, So for example, the one in Palm Beach, the agent's already told us, she's like, I love the way that you guys move. Like, we got the contract done, right? Opened up escrow, and literally the next day we're moving towards inspections, right? We're already setting inspections to get this in process. She's working with a ton of developers in South Florida, right? And so guess what? We're going to be the go-to person where they're going to continue to bring opportunities there if that's the case, right? So as agents, right, in your market, I think beyond just, the hustle mentality, if you will, or just go rapid fire, submit offers, try to chase down deals and make it happen. I'm thinking big picture with this, right? At least what I see from the outside looking in is really, really going deep with your relationships, right? Really figuring out who are those key people in all these different subgroups, right? And just, it's like reverse engineering it, right? We know the prototype and the type of assets that we're looking for. So how do we align ourselves with the people that are serving those type of areas and transactions, right? Put ourselves in alignment with it. We build those relationships. And then once we show them that we can serve it at a good level, right? Cash offers for big portfolio deals, right? Moving towards inspections, getting it pushed through, closing the deal with no hiccups, right? And then those relationships become golden geese, so I think the gain that we're seeing, right? You guys are seeing it, right? Like the way that we view real estate, it's never going to be the same. The way that we do real estate never going to be the same. And I've been talking about it for years, right? Like we're coming into the new hybrid model, right? Where there used to be a big thing like agents and investors played on different sides of the street, right? We had different directives, different ways of doing business, different pulse on the business, everything, right? The way that we did it, completely different languages, right? But it's been moving in this direction behind the scenes for several years to a point where now it's like, if we don't team up, right, creating a hybrid model, agent and investors coming in unison, teaming up, right? It's the people there's a quote that I've been holding on to a lot recently, and it says this, it's in times of change, learners will inherit the earth, while the learned find themselves beautifully equipped to live in a world that no longer exists, right? Crazy, right? Very profound, but it's really hit home with me.
Yes.
Yeah, because it's like, I mean, we'll start with like the flat fee brokerages popping up, right? And commission percentages going down, right? Where 6% was standard nationwide. Now 5% and below is like the new norm, right? You're excited if you can get a 6%, on both sides. We're seeing this, and if we don't have listings, right, just the amount of work and the hustle to go show buyers houses and submit multiple contracts, like 10, 15, 20 offers above asking price and get beat out on everyone. If you're a VA loan or an FHA, you can't really even play ball, right? It's like so crazy, but it just really lines up with like the time is now for us to really figure out, team up, right? Strategically figure out where the market is going, right? We're not playing checkers right now. We're playing chess. We're trying to stay ahead of the movement, ahead of the ball, so that we can reverse engineer it and, okay, where's the most amount of liquidity, most amount of money flooding into the market? How do we focus on that, right? And create a pipeline in the system to create opportunities for our own ecosystem.
And that's really good what you were mentioning as far as the hustle and bustle, because as for me, the way that I operate is, and I've spoken to Jason about this previously, when someone wants to put in an offer, let's go, let's move, let's make it happen. But
Yes.
if time, we know that time is of the essence, but if we're submitting these offers, me personally, I don't hear anything back. So I'm not sure if it was received, if it was rejected. I don't know. I don't know if you guys need this offer right away, if it's going to go through this entire cycle. We may not get a response back in time because we know how fast things are moving.
Yes.
Especially if it's a hot listing. And Jennifer mentioned it previously as well in her comment that things are being sold over asking. That's the market that we're in. So if everything is being sold over asking and we're submitting offer for like $3,000 over asking or $4,000, we know that offer is not going to get accepted. So that is one of the things that's playing in my mind right now, just from the couple of offers that I've submitted thus far for your firm. Is there a need of urgency? Do we get any type of feedback as to, are we going forward with this or are we not going forward with this? How much are you willing to go over? Because the last thing that we need is to be presenting offers, and it's a waste of our time, because you're going $3,000 over. That's not going to get accepted, not in this market. So is it worth it for us to continue to go that route if we know that it's not going to stand a chance of getting accepted? I know I asked you like 3 different questions right now, but this just kind of thinking on top of my head before I forget it.
Yeah, all really good questions. So I'll be honest, looking at the one-off single family, right? The single family appetite. So we're talking the companies, right? The big funds in these cases, they're billion-dollar companies, right? Billions, huge companies that I look at them, they got all the money and the liquidity and they pay more than any other cash buyer in the market. But the one thing that they don't have is speed in many cases. They're quick with the portfolios. I don't know why they're moving on those things, but the speed with the single families, it can be a little bit slower, right? But internally, as far as our process, so let me go back to this. I think of it like a huge cargo ship that's going in the sea, right? It's got all this momentum, but when it's trying to make movements and turns, it takes forever to pivot it and turn in position. So internally, whenever a property is submitted, our team will underwrite the house, right? We'll look at it, put eyes, we'll look at the ARV, right? The market value, make sure that lines up, condition, location, and make sure that it fits all these parameters. And then based on that, we're making a quick decision. Hey, does this fit the buy boxes that we can quickly submit it? And if not, how do we get a response to the sender as quick as possible? Right. So for example, I know Jason sent, I think, 3 deals, 3 or 4 at the end of yesterday afternoon.
Right.
And I think most of them, I saw Lisa punched a couple email responses, but we're doing our best to like put eyes on them quickly and then get back as soon as possible. Like, hey, this is the scenario, right? And it really comes back to really following the buy box locations almost to a T, right? Not paying attention as much to the zip codes, but making sure that it's in alignment with the appetite, right, for the funds in the markets. And if it's in a market and the market's not on the list, then we probably don't have a fit for it, right? It's hard to push it through. So it's, being very selective with that. So it's hard to, because every deal, is unique in its own sense. It's hard to really put, like, I almost have to put a blanket process and an answer to help highlight, the bigger overarching process with it. But that brings me to the point where it's like the single one-off deals are cool. They are, but I'm telling you, we start thinking bigger. The bigger deals, I don't know what it is, why it is, but the bigger deals are almost always easier. It's the craziest thing, right? But it's the bigger deals, biggest opportunities. Everyone's making more money. And for whatever crazy reason, they're the easiest ones, right? And the smallest deals are the ones that make you put in the most work, the most effort, and the seller's blowing us up, asking for updates on the hour, every hour, right? Not to discourage you from going after single one-off deals, right? Because that's great. We can still make good money, good opportunities there. But I mean, internally, even with us, like we're really leaning in and we're going all in with the portfolio strategy. Take one portfolio to make what you could make in 10 to 20 transactions for single family deals. It's just, it's almost like a perspective shift, and yeah, I know that doesn't like help or directly answer your question because it's really hard to really dial it in, right? But in its simplest form, checkbox number 1, let's make sure that it's in alignment and it directly fits the buy box for at least one of these funds, right? Really understanding their acquisition and their appetite in each market. And then 2, as far as the speed, if it is a single one-off deal, internally, we're giving a response as quick as possible, right? So you can expect to have that within 12, 24 hours. The funds, we expect to have a response within 24 to 48 hours, right? So usually in a day, sometimes it might take 2. Fund 1's been really slow for this season, right? But it's always kind of like adjusting in the seasons, but this Fund 3's picking up a lot. But 24 to 48 hours is pretty standard, right? To get the first initial offer. If it doesn't fit up front, we're going to let you know as soon as possible. Hey, this doesn't fit and this is why. And then once we have the offer through, we can usually move towards inspections pretty quick, right? So we'll assume 2 days in to get the initial offer, inspections another 3 days, right? 3 to 4 days to get those scheduled. So at that point, we're in 6 days with the weekend, right? So almost 10 days after the weekend. And then after the inspection has taken place, in most cases, I would say it takes like 2 days to get the final answer, right? I don't know why it takes 2 days to look over the inspection reports and underwrite it and give the final answer, but that's, one of those layers in the process that takes us to like just right at the sweet spot of that 10-day due diligence period. right? Where in some cases we have to send an extension because of that timeline, right? And that speed. I usually encourage, and I know it's really difficult with on-market deals, if it's possible to buy a 10 business day due diligence, that's perfect, right? If we only can get the 10 days, let's go for it, right? But worst case scenario, if for whatever reason the fund's moving a little bit slower and it falls into 30%, right? 30 to 40%, that it might take longer than the 10 days to get like the final answer, then we just need to make sure that we have the addendum in place. So it's not a really, it's gauging that part of the expectations, especially with the on-market deals. Off-market deals are a little bit easier to navigate for the single one-offs. You leaving? Bye. Awesome. Sounds good. Easier to navigate the off markets for the single one-offs, right? Just because there's not as much like pressure on the timeline with it, right? And again, the funds have all the money, right? So we're kind of playing by their rules, but we've created and built a process that we can make sure to at least serve and communicate with the people in accordance with those needs. But again, the perspective shift, I'm all in for going big, right? I'm all in for let's go after these portfolio deals. Like that's my encouragement to you guys, right? It takes the same amount of time and effort. It might be a little bit of a shift in like the network and the people, the community you reach out to for that. But it's so worth it, right? It's worth it because it challenges our personal growth, right? It might be a little bit different going after these bigger deals. There might even be some new lingo, right, that we got to pick up in the mix, new relationships that we need to build. But I'm telling you, in this rapidly changing and evolving real estate industry, I'm convinced that the people that will make it are the ones that start to really evolve and start to think bigger and do bigger. No one really knows what's going to happen, right? But I think about it like the economy got carpet bombed, right, with all the free money, and it's just kind of settling in, and all like the worker ants. We're all out here. We're hustling to make opportunities and bring deals and this and that, right? But like regulations are coming. Even like where the DOJ sued NAR, right? That was like a battle, like government against like the realtor commission, right? And then the government straight wants the commission to cut commissions, like it's really interesting. But it's I think real estate's morphing, it's changing into something new. And the fact that so many middle income single family houses are getting bought up by these hedge funds and institutions, they're going to control a good bit of the market share in the next 10 years, right? So when we're focused on like the single one-off deals, I think traditional real estate as we know it might not be dead, but it's just going to look very differently, right? But I think it should challenge us. It should challenge us to evolve, right? Because we see what's coming. We see the movement on the back end, right? So how do we evolve ourselves, flip our perspective where we can start targeting and going in the bigger deals, right? Putting us in a whole new ecosystem, right? Challenging us to learn, new strategies and stuff. But I don't know. I'm not saying, I don't know. I guess that's my perspective, right? It goes really deep and there's a lot of ways to look at it. But we can all agree it's pretty terrifying just seeing how quick things have changed in just a couple of years, right?
Oh, absolutely. Absolutely. So over here in this area, if there's a lot of course, golf course communities, and I understand that the HOAs factor into whether the fund is going to accept it or not. Do you have a cap? Have you ever considered maybe the most that you're willing to, how should I word this, for communities that are in those different types of areas that have higher HOAs, or a lot of them have initiation fees that are like in 5 figures. Are we staying away from that?
I would say for the most part, probably yes. The number one factor with, especially in the golf course communities, number one is there a rental restriction? Because if there is, automatic disclose it, right? Like I live in a golf course community, no rentals, right? If you don't live in, it's not your primary residence, you cannot rent it, right? You got to sell it. I think that's probably similar in a lot of golf course communities. That topped with the high HOA amount which is going to flip the cap rate upside down, I'd say it's really hard to play ball. I don't think we've sold any to the funds that's in a golf course community, to be honest.
Now, there are going to be some foreclosures that's coming up. That's the reason why I brought that up. There's one that's like a 3,800 square foot home on Kalawasi's golf course, but it's like $319,000. So if we're looking at that price point, a lot of those factor into the type of home that we're looking at here. And it's a foreclosure. They're bidding on it now.
Yeah.
A lot of that does come up, but if the initiation fees and stuff like that is something that you're not willing to work with, and that kind of helps me understand not to send those type of properties to you guys.
Yeah. So I'll say this: if it's a foreclosure, and like if we can get a smoking deal, we shouldn't sleep on anything, right? Like even Savannah or anywhere else, if we're talking, there's a deal to be had. Just because it doesn't fit the funds buy box, the only reason that we're leaning in with the funds so hard is because they're paying more than anyone else, right? Like I can sell a house to a fund for the same price that I could probably put $20,000, $30,000 into it and then flip it and sell it on the market, right? So this is almost like it's like an easy, instead of having to take down the asset, assume that risk, fix it up, bring it to market value, sell it to the funds. We can just sell it to the funds and make the same amount of profit, right? But I say that to say, because we're talking lining up these deals at like 80 to 95%, right? If we can get a contract at 80 to 95% market value to us, then there's a good chance, as long as it fits the buy box, that we can move it to the funds for a profit, right? Where the traditional wholesale model, like if you're any investor that's going to buy a house cash 2 years ago and beyond, if you are not 70% of market value or less, right, or below, then it was not a deal. No one would even look at it, right? Just because you're accounting for the amount of money for private funding, right, for holding costs, fixing up the property, right, and then if you're flipping it and selling it, well, you got the real estate commissions and everything else, closing costs on the back end, right? So it's in the skew of it where you're looking at, people are buying at 30% of a discount. Well, now they're buying at like 0% of a discount, right? Because the end buyer prices, they're paying 100%. But I say that to say with that house that's on the golf course that you said is being sold for like $315, or it's listed at that. If we could get a contract, right, and it's somewhere in the ballpark of even 75% of market value. So if we took a calculator and said, okay, 315, actually, I'm doing this. We're going to take the end by price. So let's say it's worth 500,000 multiplied times 0.75. Right? If we could lock it up for 75% of the market value, that'd be a deal that we could just take down, right? We just buy it, either fix it up and resell it. But here's my only thing. If it's a foreclosure and it's on the public indexes, right, it might be listed at 315, right? But every eye in that whole county that's got money and wants to be an investor, they got their eyes on that same house and that same asset. And what that's going to do is create a bidding war, right? So of course they're going to entertain highest and best offer, right? With all these people in the market and just stupid cheap money, they're going to bid that thing up and still probably pay market value, right? But yeah, I mean, if we're able to get like a deal, right, where it's not like we're able to get it at a decent amount. I know you guys are looking at this number, you're like, this is impossible, right? Impossible in this market. And if it's listed on the market, you're probably right, right? The only way we're going to find these deals if it's off market, right? Direct to seller might be in some distress and they come to us before they go to, everyone else in the world.
Seller still quarantined and doesn't know how good the market is.
Yes. It's crazy. I'm shocked.
So B, to answer Jennifer and Monica's question, how much are we allowed to go up on price, on list prices?
For listed houses, tough. I would say base that on the value of the property, right? So if you're looking at the neighborhood and the market value is, let's just go, I mean, $100,000 is not a thing, but just keep the numbers even, right? Let's just say that market value was $100,000. We want to be ideally 80 to 90% of that number, which again is really hard, if it's listed on the market to get it at that number. I would say max, maybe 95K, right? But that's if it's in good condition. We'll say 80 to 95% tops, right? I'd really like to stay towards 90, right? Just because there's always the unknown with condition. If someone's willing to take 90% of the market value, I'm assuming the house might need a little bit of love. I don't know.
I thought we were accepting retail value for the properties, or we were offering market value for the properties.
So that's on end buy price, right? We need to be able to get it at least at a slight discount if there's any money to be had, right? The institutions, the funds are picking it up, right? Paying 100% ARV. But if we got it at 100% ARV, there's no profit to be made. So we got to be here.
So B, so let me use one more example. So yesterday, Monica pretty much found a sweet deal, which is in Pooler, Georgia. And I think it was like what, for 58, Monica?
Yes, 58. I think it was
Right,
58,
so-
58.9, one or two.
Right. So we submit an offer for what, 60? Because after the ARV beat, ARV was like what, 245 after that.
Holy smokes.
So that's
Oh
when,
yeah, pretty
right.
sweet deal.
And just so you know, Lisa pretty much, I think that was actually a part of the email. It didn't fit the buy box because we didn't have any buyers in that market. I think the only one that went through was I think the one that's actually on James Road.
All right. So Lisa,
Okay.
so the back end, they're trained up to identify, does this fit the funds buy box or not? Right. So if it's a deal that was outside of it, they probably just automatically, right? They're trained inside of a system to operate and respond like robots. Like, hey, this doesn't fit the buy box. Hey, this doesn't fit the buy box.
Right.
Like, because they're submitting and pushing it through in semi volume, right? They're identifying, does it fit? And if not, boom, prompt response. And this is why, right? But if it's a unique deal like this, where we actually have it at a discount, right? In those circumstances, I think we need to develop and we need to receive that into a different portal. Does that make sense?
Right.
Instead of submitting it into the hedge fund buy box portal, because this thing, think about it like McDonald's, right? Where it's a built out system, right? It's a process intricately woven where it's like, hey, it either fits inside of the buy box in the ecosystem or it doesn't, right? And if it doesn't, this is why. So all the deals that come through the submission area, right? They're just glancing at the buy box, and if it's not fitting, hey, this doesn't fit for this reason. So where I'm going with this is, Jay, whenever we have a unique scenario like that, where it's a sweet deal, but it's not one of these hot buy box markets, then we need to create and receive it into a different area, right? Where we process it and look at it in a completely different way.
Sounds good.
Yeah. So that's, if that's something that you guys think, and those deals, just keep in mind, we're going to have to acquire those deals for less than we would the hedge fund deals, right?
Absolutely. Yeah.
Yeah. But that's cool. If we got a pulse on that and we can do it, right? And going back to the 75%, right? If we can lean in and we can get roughly 75% for those deals, by all means, I think it's definitely worth dialing in and seeing if we could put something together. I mean, honestly, in this market, buy it, put some lipstick on the house and relist it, right? The money's there. We have access to money. Yeah.
Yeah, for this particular property though, it required a whole lot more than lipstick. It needed it needed foundation, it needed eyelashes, it needed everything. But it was still an awesome deal. It was only $58,000. So, but at this point now it's kind of late because the offers were due by noon. And that's why I wanted to bring that part about time being of the essence, because we don't
Yes.
want, to bypass any awesome deals like that continue to pass us by if we know that it's something that could be lucrative to you guys.
Yeah. I think if there's an awesome looking deal, I'm all for just putting a contract on it, right? Just like a lot of agents right now, if they're working with a client and properties are listed in their buy box, instead of going by all 20 houses, because sometimes they don't have time, they're to agents to the point, you guys, correct me if I'm wrong, I'm assuming some of you guys will just put an offer for your clients, right? And if you can get one to stick, then you go and look at the house. Same thing here, right? Like if we have a certain level of confidence, like, hey, I think this looks like a good shot, let's do it, right? Let's just do it. It doesn't hurt to tie up a property, right, for a short time period to, hey, let's lock it, and then let's move towards due diligence to see if we can piece it together. And if the numbers work on the back end, perfect, right? At least we took the shot. Obviously there's got to be a little bit of focus and clarity with doing it. But like my buddy Marcus, he's putting, 10 contracts out a day here in the local market, right? Just doing it. Looking at any house that fits the criteria. If it's been listed for a couple of days, shoot offers, right? Offers. Eventually it might stick.
That's the strategy to use, definitely.
Yeah. I mean, I'm about that, right? And I know Jason is too. Sometimes we just go for it, right? And if it doesn't work, call them back and say, hey, we push this into the system, the whatever underwriters with, so-and-so LLC pushed it back for this reason. My apologies for any confusion, this and that. Yeah. So minimum number of properties for portfolios. I'd say no minimum. I guess what is considered a portfolio?
None.
I say anything 3 and above.
Right.
Yeah, if we got a 500 house door portfolio and it's desired, they'll move on it.
Right? Don't play it, B.
I'm telling you, like it's stupid. It's the way I'm picturing it, like it's unlimited liquidity, right? Like money is it's like free. It's so available more than any other time in our lifetime, right? So they're just as quick as they can buy houses, right? They have more money, right? Just to be dispersed. They just want nice cash flowing assets.
Sure.
I think that's scary as hell if you ask me, right? They're coming to control that market share. They are.
Very, very scary.
And we are helping them.
Yeah,
we are helping them.
We are. But my mindset is, hey, I'm going to follow the money, right? I'm going to figure out where all this money is being dispersed. And we're at least going to pull out liquidity to position ourselves, our community, our network on the other side of that. It's going to happen with or without us.
Yep.
With or without us, right? It's happening.
Hey, Bernard, you have any question for us?
What was that directed towards, Jason?
Oh, he's talking. I'm going to try to unmute you, my man. I think you're muted.
There
Here we
you
go.
Hey, everybody. Yeah, I've just been kind of listening and kind of absorbing. I'm a little confused in a sense that, I know some of the other agents have kind of written and talked about it, but our market here in the Raleigh area is highest and best. I mean, and outside of that, there is no deals. There are a few off market potentially, but those are between the weeds. But that is our market. I mean, we're depending on like some of these zip codes, properties are going 50,000 over asking. Some of these parameters that we have, yes, homes are selling for, you said 100,000. When you said that, I was like, nah, that's not even non-existent. I can't even 250, low end price. And if we're going 250 and we're doing cash deals, then we've got to come out of pocket with about 30 to 50,000 in due diligence. We don't hold.
You froze. Oh, there you go.
Lost him. Dang.
Did he say 30 to 40,000 in due diligence?
Yeah, I don't.
So North Carolina, for those of you, North Carolina is unique
He's
in its
back.
own. There he is. He's back.
Yeah.
We lost you at 30 to 50,000 due diligence.
Who, me?
Yeah,
Yeah.
you froze after you said
cut-
something about
yeah, it cut
30,000
off.
due diligence.
Yeah. Yeah. We're sitting, I mean, an average selling price, at least 300,000. And if we're writing cash offers, sellers aren't going to take anything at least 20 to 30,000 in due diligence. And that's minimum. We don't really hold EMD here in our market. It's pretty much due diligence. You know, they're looking to see that money up front.
Yeah.
What
That's
is 20 to
non-refundable as well,
30,000?
right?
What does 20 to 30,000 due diligence mean? Sorry, we don't do, that sounds like a different way of speaking.
North Carolina is
What
unique.
is different?
North Carolina is the only market that does this. But due diligence, in addition to your EMD, is like your good faith, non-refundable deposit
Oh, that's what
towards
you
the offer,
plus
where
due
if you don't perform, you lost your due diligence money. I didn't know it went as high as 30 to 40. Like I've seen $5,000, but what? That's nuts.
Wow.
Yeah,
Well, but that money is applied to closing costs. So,
Right.
I mean, assuming they go through with the sale, they get it back.
Exactly. It's pretty much just a shell game.
Yeah. I mean, you
If
default.
we're financing, but with, you know, if we're doing cash, then that's gone. It's just getting applied to the purchase price.
That's crazy. Yeah, you default, you don't close on it. They're keeping that DD, huh?
Yes, sir.
That's nuts. Yeah, to your point, man, especially like coming from the traditional real estate space, I know looking at the criteria, like this is impossible. There's no way to find a deal, right? If we're going after those on-market listed properties, you're probably right? Like if we're just scouring the MLS, looking for deals that are going to fit and putting offers on it, you're probably right. Because all these other hot markets, all Florida, Atlanta, all these other areas, same song and dance, man. It's still the most competitive real estate market we've ever seen. I would say, strategy can go many different directions. I'd say it's the perfect one for, say you have a pocket listing or a client that's coming to market, right? And like for whatever reason, hey, as the agent, you can position yourself strategically saying, hey, we do have a cash buyer in the market that's playing ball in this area. Just food for thought. If you guys, for whatever reason, didn't want to put the house on the market, or hey, if you need a lease back, let's say you need to sell it, but you still need 3 months, 5 months to figure out what the next steps are in your journey. Well, guess what? We can provide that, right? So that's a negotiation piece, if you will, right? And as the agent, well, you're keeping both sides of the commission. Again, if we're going after just the listed houses, you're 100% right, man. We're not gonna win an offer, right? Trying to get it where we need to be, we're not. I think really the principle I see with it is if it's gonna work in it, and that's another reason why I'm pushing the portfolio so huge. It's not that I don't believe the single family one-off deals for on market, right? Because we got some people that are doing pretty good with it. We've seen some open doors ones because, everyone knows open doors sucks, and the houses they buy, they put lipstick on it and try to resell it, right? Some of the houses sit. We've had a couple of those that we got under contract and pushed to the fund. But yeah, going back to, with the portfolio stuff, I see how difficult it is if we're just trying to go after listed houses. Like if I'm spending my time in sweat equity, some people are getting contracts on listed houses, right? But I'm seeing better results, at least from this approach. Again, just thinking bigger, right? Getting a pulse on the investment network or investment side of things, networking with builders, brokers that deal with multifamily or, single family units, and just opening up those conversations, right? To going back to like the way beginning of the call where I was talking about, thinking big picture and where we're going in the industry. We can blast out offers all day, right? But that's that hustle. That's that hustle money that's going to get maybe some quick closings into the ecosystem. But if we're not deep diving, really focusing on building high level relationships, right, with those big players, people that are dealing with the portfolio dispositions, the developers that are putting up new subdivisions and, you know, offering it to the funds, like those are the conversations, relationships I want to be making, you know. It's kind of just a flip in perspective, you know. And for a lot of people, it doesn't work, right? It's like we got our unique way of doing business, you know, inside of our market and stuff. And if it's working, like I'm with it, right? Don't keep on doing what's working. This is kind of more just, you know, I guess big picture opportunity and knowing that we have this tool in the toolbox if we happen to see a, you know, opportunity or whatever. But we're in the season of going bigger, right? At least, you know, internally with us. And I know Jay's on the same page with us. Like we're thinking bigger, right? If we can sell one-off deals, why can't we just sell, you know, 10, 20, 50 properties in one bundle, right? And make up for all the efforts that it could have taken all year to make, right? That's the play here. It really is.
Yep.
So it's a lot, you know, there's always going to be like, you know, I guess devil's advocate, you know, what if this or what if that, you know, going back and forth, is this going to work? Right. But it's the biggest battle that we're ever going to fight is in our head, right? It's like, oh, how do we move on to these like new deals and new conversations, new, you know, network. And it's always just like going back and forth, right? But old African proverb says, if there's no enemy within, the enemy outside can do you no harm, right? So once we conquer that battle inside, and it really starts with our mindset, right? And our belief. But if you believe something in your heart is possible, right, then it's already yours, right? It starts with that belief. And you
say this, guys, don't get deterred.
Amen. I like that.
Yeah.
Don't get deterred at all. You know, I mean, this doesn't mean that, you know, you guys cannot still do what you're doing as far as that going from, you know, getting those one deals. I think again, you know, just with the, you know, using the Monica deal as an example, as long as the numbers make sense and based on the spread, the price point that, you know, Ben just used as an example, as long as it makes sense, let's do it. And just so you know, you can actually find on-market deals, which, you know, I do every single day. Candace will tell you, I mean, you know, these guys will tell you, you can actually find on-market deals that's an actual deal, and you have the spread. So don't get deterred, you know, I mean, again, the premise would be, you know, preferably, you know, I mean, finding some portfolio deals and all that, so we can actually have a, you know, a much wider spread, but don't get deterred from these single deals. That's the whole premise why, you know, we're here together building a team. The more deals, you know, the better. I understand what you guys are saying as far as, you know, I mean, you know, how much are we allowed to pretty much, you know, give us an offer, as you know, and all that. I mean, again, if the numbers make sense, go with it.
So are you open to suggestions? So if I was to say, for an example for the one we were doing yesterday, Jason,
Right.
58,000, we only offered 60. That is an offer that if I would never submit an offer for one of my clients, unless of course that's what they want. But my recommendation would never be to go $2,000 over, because you'll get outbid every day of the week and twice on Sunday. So with that, go ahead. I'm sorry.
You're right. You know, I mean, and that we can actually go up a little bit more because the spread is so wide. But at the same time, you know, I mean, you still have to pretty much factor in your rehab cost price. So, B, when we get a chance, we're gonna talk about that deal a little bit more, because we probably could actually just like, you know, I mean, flip it.
Yeah.
So we'll talk about it later. But again, Monica, you have a good point. You know, I mean, we can always go up a little bit more on it and see, you know, I mean, what we can actually come up with as far as that doing a counter offer.
Okay.
Awesome. Cool, guys. I got a 3 o'clock that I got to run to. But good meeting. You know, we're here. If you guys even wanted to get together for, you know, say a weekly or bi-monthly meeting where we can dive in strategy, we're more than happy to really take a deep dive with it and even go over like some case studies, right? And go over some deals that we have in process, you know, deals that we've closed in the past, whatever that might look like. I mean, we got a good bit of volume. I'd say more off market than on market, right? But again, for like the licensed salespeople, right? I really think there's a unique opportunity just based on what we have seen already with the bigger deals. There's a unique opportunity to really deep dive and build relationships, right? And so diving in with that pitch, right? Literally having the conversation like, hey, we're working with, these big institutions. I'm working with a big fund who has a heavy appetite for properties and portfolio deals in this market, right? Just wanted to reach out, make the contact, right? If you guys happen to have like a list of all the agents in your market, right? Like I know we can all download different lists from, whatever source or even inside of your own MLS. You can pull that and just have a really well-written email, right? Like, hey, just wanted to reach out and make the introduction. I'm an agent with so-and-so. Just wanted to let you guys know that we're working with some, big institutional investors, some big hedge fund buyers, cash buyers in this market. Yes, we do have an appetite for single family homes, within this criteria, but we even have a larger appetite and a desire to pick up portfolio opportunities in this market. If you happen to, have any of these available or have a pulse on this market, I would love to open up the conversation to figure out how we can work together, right? And put some deals together, right? So it's relationship building, right? Starting big picture, right? That aggregating all the emails for your local market. And that data is there, right? For the agents and stuff, putting it out there, having a catchy email title like, single family portfolios or something like that. Well, guess what? Only people that are going to click and open that email are probably people that deal with single family portfolios, right? So we're putting it out there so people know that. Well, guess what? We do that once a week, right? We put a social media post up. Hey, working with a hedge fund institution, or big cash buyer in the area. Anyone that might have a pulse on the portfolio deals at this moment, I would love to chat, right? You put that on your Facebook and guess what? All your agent friends and everyone else in the network's like, hey, I remember Monica was, asking the other week about portfolios. Friend inside of the brokerage or whatever the case might be has this opportunity. Well, guess what? First people that come to mind are the ones that are right in front of them, right? So that's another thing. I'll leave you guys with this, just seeing how like real estate and even just marketing as a whole has evolved. Marketing, I feel like for real estate, whether it be agents or investors across the board, it's changed from traditional marketing, direct mail, even cold calls, text messages, whatever it might be, more to like social media, right? Social media presence is the most powerful tool that you guys have available to you, and it's free, right? If we're not utilizing social media on a daily basis for business, we're leaving way too many opportunities on the table, right? That goes for all facets of real estate, right? Everyone in your ecosystem should know what you do, right? Same thing with the portfolios. Like people get a little bit of the word on the streets, so-and-so's, working with some big buyers. Well, guess what? You're going to be at the top of the mind whenever they need a cash sale or whenever something comes up, right? So again, it's not looking at it from a different perspective. We're not just blasting out all the offers for on-market deals. Yes, that's something we could do in active time if there's deals that look like they make sense, but it's more like we're setting the stage and we're bringing awareness to our network to let people know inside of our ecosystem what we're doing, what we're focusing on, so that we're top of mind whenever they have opportunities. That simple, right? Social media has transformed my business tenfold in the past 2 years, right? So I just encourage you guys to go all in, whatever that means to you, I would run with it, right? Figure out how to leverage that as a tool and just seek to dive and build deeper relationships, instead of the face value stuff, like deep dive, get to know these people, figure out how you can serve them, how you can bring value to their network, right? They'll do the same. Cool. I got to run, guys. Good call. I will have a recording of this for anyone that wants to review it. So just reach out to Jay and I will see you guys on the other side.